Welcome, dear traders. I hope your weekend has been great, and so you have recharged and are ready for the new trading week. As usual, we start the day with a recap of the Asian session. And today, the US dollar is an absolutely leader on Forex. Let's find out the reasons for its dazzling rally. The US dollar maintains its winning streak and high demand. Analysts believe that it's likely to retain its steady growth in the long term. There are plenty of reasons for this. The main ones are geopolitical tensions, the highest inflation in 4 decades, and the strongest US job market since the 1950s. Apart from that, market participants are expecting several rate hikes by the Fed. However, these are not all positive factors. Another one is rising US Treasuries. As a result, the US dollar index has reached a high of 100 points for the first time since May 2020. Moreover, its main rival in the market, the euro, rose moderately amid the midterm election results in France. At the time of making this video, the US dollar index was trading at 99.76. However, the greenback is likely to grow further in the range of 99.60 and 100.05 today. At the same time, the US stock market closed mixed last Friday. Investors flocked back to safe haven assets because of aggressive monetary tightening by the Fed, worsening relations between Western states and Russia, and the new package of sanctions. They mostly get rid of rapidly growing stocks, for example, tech ones. Traders fear these shares are likely to be hurt the most in a case of rate increases. For this reason, investors have switched to rising stocks of energy and financial companies included in the Dow Jones. This index is more reliable in turbulent times. As a result, the Nasdaq lost 3.86% during the week, while the S&P 500 dropped by 1.2%. In the Asian session, US stock futures continued to decline, and this week is going to be very busy for Wall Street. Besides, it will be shortened because of the holiday. The earnings season for the first quarter of 2022 begins. Inflation data is also on tap. Some analysts warn that figures may be quite negative, which may adversely affect the stock market sentiment. If so, the US dollar will certainly approach new highs. The yen has no chance against the greenback, and the Bank of Japan sticks to an ultra-soft monetary policy. Japanese government bond yields are hovering near zero. This is why the yen is bearish the bond. It's simply unable to recover amid the Bank of Japan's dovish stance. The dollar-yen advanced by 1.5% last week after a 6-day increase. Moreover, analysts do not exclude that the pair may approach a high of 125.10 this week. And today in the Asian session, the pair was trading with a bullish bias at the level of 125.20. FX strategists note that the pair looks overbought. Now bulls are stronger than bears. This is why the pair is likely to move between the support level of 124 and the resistance level of 125.44. The AUD USD also shed losses due to bearish fundamental factors. To start with, downbeat macroeconomic stats from China have had a negative impact on the Aussie. China is Australia's #1 export market. Apart from that, China revealed inflation data for March. The reading turned out to be higher than expected. The country is also coping with the worst outbreak of the pandemic since 2020. Shanghai, the biggest trading hub, has also been closed due to the virus spread. Oil prices, the main driver for the Aussie, are also declining, so it's hardly surprising that the Australian dollar is losing steam against the US dollar. The pair has already broken through 0.7436. At the moment of preparing material for this video, it reached 0.7439. In the Asian session, the pair was moving in the range of 0.7419 and 0.7468. So the current trend is likely to persist. And that's all for now. Subscribe to our channel and stay up to date. Feel free to leave your feedback and our analysts will gladly answer your questions. And see you soon.